So as I mentioned, we help them to, to create, build, and grow their wealth outside of Wall Street in any economy. And basically, what the focuses of our firm is, we use insurance vehicles and then also alternative investments, which real estate falls into that. So we use a strategy which some of your listeners might be familiar of. It's called the infinite banking concept, where we use a overfunded whole life insurance policy with a mutual insurance company to warehouse our wealth. We do it because the money goes in there, it's guaranteed, it's growing tax free, and you also get to participate in dividends. But the most powerful thing about it is actually leveraging the money that's in that contract to go and invest in other asset classes. We do it through multifamily, we do it through mobile home parks, self-storage, assisted living facilities, and then also for non-accredited investors, we have some turnkey partners. So in the I believe it was the 70s when the interest rates were really, really high. I think it was double digit. A lot of people would walk into a bank and open up a CD because you would get double-digit returns, right? So they would go in there, they put their money in basically in a bank in that CD. Well, they would walk into that same bank maybe a week or so later when they have an investment opportunity and say, Mr. Banker, can I get a loan secured by that CD? So let's just say there was, $10,000 in that CD. They would borrow, $8,000 or $9,000 secured by that CD. And a lot of people were doing this in the 70s when it made sense, right? We're doing exactly the same thing. There's only a lot of additional bonuses with the insurance vehicle. So we set up these contracts for folks. We show them how to fund it. It's a very specifically designed vehicle. It's not your cookie cutter, whole life insurance that Dave Ramsey and Susie Orman jumps all over about. It's designed a little bit differently. And then we do the same thing. We borrow against our cash value, and then we leverage it into investments that produce cash flow. The cash flow, we then just pay down the policy loans from the insurance company as we get to do it all over again. So there's an infinite flow of money into the insurance vehicle because it's a private asset, because it's a financially invisible asset. And it has all the other benefits of tax-free growth, predictability, guaranteed money outside of the Wall Street casino. And then, the ability to leverage it and to invest in cash flow. There's some great cash flowing assets and rinse and repeat. So the money's always moving. The rules of money has changed as we share quite a bit. And one of the rules of money is money in motion needs to stay in motion. Otherwise it dies, right? Because of the amount of money printing that's been happening for decades now. But yeah, it needs to do that. So that's kind of been our system. We didn't come up with it. We just copied and pasted what very successful investors do and what certain private family offices do.